I sent it to her just now
Oh, okay, good.
at
Okay,
her True Benefits email address.
okay. And are we starting on time, or is it going to be just a couple minutes?
We'll see how many people join.
Okay,
So we should be able to start in time. So
and a couple minutes.
yeah, we'll wait like maybe 5 minutes or something.
Okay, I'm going to turn off my camera for just a second, and I'll be back
Sure.
in just a few minutes. Okay.
Okay. Awesome.
Text me if you start to go, let me know. Okay, just text me. Okay, Arafat.
Sure. Absolutely. I'll text you.
All right, thank you.
David, do you know if Casey is about to join?
Yeah, she said she can see me, but she said, can you see me? And I said no. And then she
What
said she's in right now.
I see her, but she's as let me add her as a contributor. Okay. I see her. See her has joined. Yeah, now I can.
Oh
Yeah,
man, I think I just I swear, I think I just logged out. What the heck? Hold on a second.
No, you are still logged in. Yeah.
Okay, but I don't see it. Let me see. Where did that just go? Oh, okay, I'm good. Woof.
Yeah. Awesome.
Okay. Yep, there she is.
Hey, Casey, how are you? You're on mute.
Casey, volume, microphone.
There we go. Hi.
Cool.
Awesome.
How are y'all doing?
Good. So I think it's about time. It's 2:05, and people have started to join. I see doctors here who have joined. Welcome, everyone. So I'm gonna begin with introducing our presenters. My name is Arafat. Myself, I work with Dr. Yarkhan, and then I'm a co-founder of DentTracks. Dr. Yarkhan unfortunately was unable to attend today. He has an emergency, so he asked me to present on his behalf. We have David Foy and Casey Raney, co-founders of True Benefits. It's a financial firm, and then they will be explaining us about R&D tax credits and how it helps dentists and dental business owners to tap into that additional revenue or additional chunk of money that's sitting in your business that no one is talking about. We'll first run through the introductions. Casey and David will introduce themselves, what they do and how they do it. After that, there will be a small presentation. I believe David will do that. And then we'll open the floor for question and answers for everyone. I hope everyone is able to listen to us, and then we will be able to send messages. If you can, please go ahead and send messages so that we know that you are able to hear us, or at least raise hands so we can open the question and answer session at the end of the presentation. Awesome. I see some thumbs up coming in. I don't know from whom. But over to you, David and Casey.
Perfect. Well, I thank you very much. And Casey, you want to tell everyone?
Yeah. So hi, everybody. I'm Casey. Like he said, co-founder of True Benefits. We specialize in tax credits that help you reduce your tax liability. We do the research and development tax credit. We also have a payroll tax credit, and we also do cost segregation. But today we're going to focus on the research and development credit. David's going to be presenting, and I'll also be there to help go over a few details.
Yeah, perfect. So we really appreciate everybody being here on the call today. And Arafat, would you like me to share my screen and maybe go through some
yes, please,
an introduction to what research and development really is and so forth,
awesome.
And then we can break it down and open it up for questions, as you said. Okay.
Sure.
Okay. Perfect. And you can see the screen. Everybody can see it well. Yes.
Yes.
Can you see the screen?
Yeah,
okay.
Yeah. Let's see video. If you can make it
bigger
as presenting.
Okay.
If you go to slideshow, you see on top there are home and animations. There is a section slideshow. Yeah, there you go. And then from beginning on the left hand side, the first option.
There we go.
Yeah.
How's that?
Awesome.
Okay, perfect. Thank you for guiding me through that. Okay, everybody. So as Casey said, my name is David Foy. She's Casey Raney. We are co-founders of True Benefits Consultants, and we are specialists in research and development tax credit. So let's introduce this to you and give you a little background. So first question we normally get is people don't understand. They've heard about research and development tax credit. They just really don't know what it is. So just a quick little elevator, 30 seconds. The origin of research and development, it all started in 1981, and it was originally called the Research and Experimentation Tax Credit. It went through many evolutions of changes in Congress and ultimately became a permanent part of the tax code under President Obama with the passing of the PATH Act. And what R&D really is, it's available to all small businesses, medium businesses in the United States, and it's a reimbursement to you for investing back into your business, elevating your skill, the technologies in your business. So it's under the whole philosophy of using American innovation with American technology, American manufacturing to increase the skill sets of the American workers and create American jobs. That was the original mission. And under that, that's where it became developed tax credit, now a permanent part of the tax code. Again, it's the investment of new or existing products and processes. Anything that enhances the performance of your operations, the functionality, the reliability, or the quality. So we're going to get into this just a little bit more, but that's really important because you don't necessarily have to be developing a new internet. You don't have to be the one creating a new CVCT scanner. The fact that you're implementing it and it's changing the performance, function, reliability, or quality of your services to the patient is what's going to help qualify for the research and development tax credit. So most people who don't know about the R&D tax code, they may have a naysayer in their life telling them, oh, I don't know if you qualify, or you may be telling yourself you don't think you qualify. Well, under Section 41 of the Internal Revenue Code, and using what's called the alternative minimum tax calculations, all of your wages, expenses, and supply costs and so forth, as you're going to see in a second, are taken into consideration. Now, we use what's called a simplified alternative crediting method, and that's very important for you because you do not have to provide copies of every receipt of everything that you've done over the last 3 years. To qualify for research and development tax credit, your activities, qualified research activities, must pass what's called a 4-part test. So in our assessment of what does qualify, of all the things that you do on a daily basis, or the new machines that you've added, going from analog to digital, digital to AI, going from wall-mounted x-rays to handheld x-rays, any of these types of new improvements that you've done, what we need to assess for you and be able to present to help qualify is that we are solving some elimination of uncertainty. Does this 3D printer work as well as that 3D printer? Does this milling machine have the capability, like a CEREC, does it have the capability to be able to mill zirconia like the maybe a prime scan or some other? Those are uncertainties. There's a process of elimination. What did you do to decide whether this machine was working? Did you come to a deficiency, a pain point, or were you just simply comparing and you're trying to figure out what works better, faster? What is it technological in nature? Everything you do in the dental practice is technological in nature, or biological, mechanical, electrical. It all pretty much is hard not to qualify as long as we keep our minds in play on passing this 4-part test and document it properly. And then there must be a qualified purpose. Not purchase, purpose. Oops, sorry. So I skipped one, and let me go back here. Okay, so there's qualified research activities. From those research activities, then we have what's called qualified research expenses. So this is the costs that are associated directly with the qualified research activities. Those come in 4 buckets: your W-2 wages, your supplies, your third-party costs, and research payments. If you are working with some university or a manufacturer, or you're personally developing a new theory, a process theory, as one of our clients is, those costs can also be taken into consideration. Most of the recovery money that we are talking about is going to come from your W-2 wages, your supply costs, your things like your lab fees, dental supplies, those type items. Now, I'm going to restate this. I made the statement earlier, and I'm going to restate. The absolute number one reason as to why most businesses have not taken advantage of the research and development tax credit is self-censoring. You telling yourself or listening to somebody else tell you that you do not qualify. We don't believe that, and Casey and I have a plan to help you out. Under the One Big Beautiful Bill Act that was just signed into law, there were a couple changes that took place. One of them is what's called the lump sum recovery. Between January 1 of 2023 and July 4 of 2025, the ability to capture all of your money back in one lump sum was taken away temporarily, and you had to amortize your recovery over a 5-year period. Factually, financially, rationally, that did not make sense. And so luckily they have changed that. This is a beautiful opportunity for you to capture all of the recovery all at once. The second thing is that we have always had what's called a 3-year look back rule. We were able to go back 3 years and capture past years that were missed to be able to get that to you. In this new bill, this is the last chance they are giving anybody a look back at all. So right now, the 3-year look back rule provides you an opportunity to capture your R&D tax credits for 22, 23, and 24. Starting in 2025 tax year, you have to do it each year, and it must be submitted as a timely return. You will not have any opportunity for a look back. So again, Casey and I believe you probably qualify. And we want to make sure that we give you a full opportunity to see if you do. So we have a very streamlined business qualification process. We work with you and your CPAs closely. We are not trying to replace your CPA. We want to work with them. You and your CPA will provide us the proper documentation we need to provide you with prepared qualified research activity reports and qualified research expense reports that we're preparing the documentation to present for the calculations and ultimately come back with what's called a tax credit estimate to show you how much you qualify for.
So David, I want to stop you there for just a second.
Okay.
You got to consider that the people that are watching this presentation are absolutely lay people, and we want to give them as much information as possible. So if you can go back to your previous slide and explain again what is the big beautiful bill you're talking about, what they reversed on that, and
Okay.
then what do you mean by applying for all 3 years together in 2025?
Sure. So this actually is the latest, the One Big Beautiful Bill Act, the modifications to the tax code through Congress. This is it's part of the bill, and it applies directly to the research and development tax credit. And this is the latest changes to research and development tax credit from the original that I was talking about, that research and development started in 1981, became permanent part of the tax code in 2015, signed into law with the PATH Act. And now, again, during all that time, we have always had an option of being able to claim a research and development tax credit, not just in the current year, but to go backwards and catch 3 years back. So in 2024, you could get 23, 22, 21. In 2025, we were able to get 22, 23, 24. You're filing your tax years and the recovery of the expenses that you incurred during that time. With this new bill, effective tax year 2025, when you put your taxes together to submit to the IRS in 2026, because you're filing the year after you actually have that tax year. Starting with 2025, there will no longer be the ability to go back and capture 22, 23, 24. And so this is a very special opportunity for everybody out there who's learning about research and development tax credit, who has not taken action on the research and development tax credit. This is a very special opportunity to be able to capture that money that was left on the table before this provision expires.
Okay, and then how much time do the listeners and the business owners have to be able to capture that in 2024?
Okay, so we are in 2025, and we will be able to do this all the way through July of 2026. So we currently have 10 months to take action on this opportunity with the 3-year look back rule. 10 months sounds like a long time if you are a procrastinator. I can put it off, no worries, I'll get to it later. The problem is, if you procrastinate, you're gonna be further down the line. It's like anything else with the ERC, the PPP, all of those things. The ones who got in first got processed first. And just like a traffic jam in the morning, if you leave your house at 5:30, you get somewhere in half an hour. If you leave at 6 o'clock, you get there in 45 minutes. And if you leave at 6:30, it takes you an hour and a half. The earlier you get your claims in, the faster they will get processed. So that's why we are urging people to take action now. But we actually have 10 months to be able to get this in. July of 2026, this goes away.
Thank you, David. You can proceed.
Okay, thank you. So Casey and I, again, absolutely strongly believe that you likely qualify and that there's money there for you. And even if you didn't have your practice in 2022, if you started your practice in 22, if you started your practice in 23, it does not matter. We still want to take a look at it because there may be money there. We have streamlined the process to make it as simple for you as possible. Again, we work with you and your CPAs to capture the documents that we need and prepare qualified research reports qualified research, expense reports and activity reports, and then provide you with a no cost, no obligation tax credit estimate. At that point, you have the opportunity to decide whether you want to move forward or not. So I'm going to have Casey, I'll flip the slides, but I want to have Casey tell you about the documents that we actually need, and then anything else that comes along with that. Okay. So Casey, let me take it over to you and give you this slide.
Okay, thank you, David. So what we're needing is, it looks like a lot of documentation. It kind of is, but your CPA should easily be able to provide you with all these documents if you don't have them handy. Since we're looking at tax years 2022, 23, and 24 currently, we're going to need your W-2s, and we're looking at that because we're looking at your yearly gross wages for each employee. And we need to know that because we're going to categorize. We need to know which one are your doctors, which one are your dental assistants, which one are your hygienists, because we're going to allocate a certain R&D percentage to each employee. And that's how the calculations get calculated. We're also looking at your profit and loss statements. From that, we're able to look at what were your lab fees, what were your supplies, did you have any software that you purchased, computers, new iTero scanners, things like that. We're going to need your 1120s or your 1065s, whichever you're categorized, and your personal 1040s. And the reason we need your 1040s is because your business is what generates the credit, and then it falls down onto your 1040. So when you get your refund checks, they're actually going to be written out to you personally, not the business. So you're going to get your checks mailed to you at your personal home address. So you want to also make sure that the IRS has the correct address on file, because it causes a mess when it gets mailed to the wrong place or gets sent back to the IRS. It takes a while to get the checks reissued. We also have an R&D intake form. We can help you out with that. It's going to maybe sound a little complex or confusing. We always ask, fill it out the best you can, and then we'll go over it with you, and we'll make sure it's filled out completely. We're going to make sure that we substantiate your claim 100%. If you're in a state that you pay state taxes in, then we're going to need your state returns as well for your personal and your company as well.
So in this particular slide, Casey, I want to ask a couple of questions.
Okay.
One is that you mentioned that all this documentation is voluminous and it can take time. So what I've experienced with you guys is you were able to contact my CPA directly as long as you have the authorization from the client, and then you're able to extract all this information from the CPA directly, so that the business owner, because most of the business owners here are, you have to understand, they're clinicians too. So they are busy with their patients up until 5 o'clock, 5:30. And then they have to work on it either individually, which can delay the process, or the CPA office is already closed by then. So the way you guys did with me, is it possible for you to work out a plan with the individual clients so that you can directly stay in touch with the CPA and extract all this documentation?
Yes. So if you're interested in moving forward, there's a few ways. David's probably going to provide the contact information, or you can also go on our website. There's a contact form. You can enter your information. We're always going to email you a detailed email with a list of the documents. The best way to do it, from what I've seen, is forward the email to your CPA, introduce us to your CPA, and let them know that we're going to be helping you claim the R&D credit, and ask them to provide the documents. We're going to provide you with the Dropbox link, and then they can put it in the Dropbox, or most CPAs send us a link to their portal with a secure passcode. So whatever works best. Some bookkeepers help with this information. Just however y'all can handle it personally. It doesn't matter how you do it, but just feel free to loop us in with your CPA. A lot of the CPAs want to get on the phone with us because they don't understand the process or what it is, and so we educate them as well.
Okay, and then the second question related to this is the check that you were talking about. This is very, very important to understand because it's not something that your business gets the money back on this particular credit. It's actually you who get the money back. So if you can put some light on it, as it's a critical matter.
Yes. So like I said, your business is what is always generating the credit. So when we do the calculations, we're going to come back with an estimate based off your 1120s, your P&Ls, your W-2s. Once we calculate, or once we follow the 1120s, we're going to then follow your 1040s. The 1040s is where you actually get the refund money. So even if you have a partner, based on your percentage ownership, both partners or you just on your own are going to get a check mailed to your personal address. Each year is going to get processed most likely at a different time. So you're going to get, say if you're doing all 3 years, you're going to get 3 different checks in the mail. If you're in a state like say California, you're going to actually get state returns as well. So if you're in a state like New York, you might actually owe taxes. So be prepared to get your refund checks at your personal address. So it is very important to have the correct address on file with the IRS. Another thing that's really important to know, and which is amazing, is since this is money back from previous years, you're actually going to accrue a lot of interest on this money. So say you're getting $100,000 back. You might actually end up getting $115,000 back because of the interest. So a lot of times you're able to pay our fee, which David can go into the fee in just a minute. A lot of times that interest pays for the fee, the cost of our work.
I often have to just almost laugh to myself and tell people I lived all over the world, for different parts, not all over the world, but America is a beautiful place when the government is the only government that gives you interest on money they're giving you.
Yeah. Yeah, thank you. You can proceed, Casey.
Okay. I think that's pretty much that's a full list of documents. Like I said, we can email you a checklist and a Dropbox link. And that's pretty much how we start the process. Once we do get your payroll documents, you can send us payroll summaries or W-2s. It doesn't matter. We can work with either one. But what we're going to do at that point is put that information into a spreadsheet. And then we're going to send it back to you because we need to know the job titles of each employee. And we really have to know that pretty early on in order to get started, because after that, we're going to need to get on a phone call to go over specific details in order to create your reports, your qualified research activity reports. That David really specializes in that part of the process.
Yeah. So, and that's a really good point. Thank you, Casey. And let me explain that in the qualified research activity report, that it's right here, this qualified research activity report. Going back to the One Big Beautiful Bill Act and some of the changes that have taken place, it's a small change. It's not really written in the code as much as it's an expectation, a new expectation that we have to be able to document just a little bit more than we used to in the past as to the legitimacy of the research activities that we're claiming. I have probably taken it a little bit more serious than some, not sure, but I definitely take time to want to know and to document on your behalf, not just what have you done, but why. What did you have before? What was missing or what was wrong? What caused you to make a financial investment into a new equipment, software, move to a new process or procedure? And then we document that transition. That transition documentation is the substantiation that we provide on the front side so that we eliminate any concern or most of all concern of any IRS agent looking at a file that's incomplete and thinking, I probably need to look into this. By us being proactive on the front side and providing detailed reports as to what you did, that you went from a CERIC to a Carestream, or from, to a Glidewell milling, and the reason why, and how it saved your client or your patient from having to come back 2, 3, 4 times, or come back 2 weeks later to have a new prosthetic put in, when the milling can be done in-house and done in a day. Then you're saving patient time, you're saving work time. In many cases, y'all have already seen that you've reduced your chair time. Things are more effective, efficient, leaner. You've reduced costs, you've reduced waste. The digital technology has really impacted your businesses. And I'm finding that in many cases, your profit margins have actually gone up based off of this as well. So that's where I take joy in visiting with you with a one-on-one call, learning about you individually, your practice. Maybe you have multiple locations. Some cases you may have 3 and you did the same upgrades across all 3. Maybe you have 4, 5, and you only did certain upgrades at different times. Whichever that is, we're going to document that and provide that in separate annual reports. So in past, we could do one report that was a broad brush covering, say, 19, 20, and 21. And now I take the time to break it down to each year, because as Casey said, each year, the file of the claim that you're submitting each year goes in its own separate folder. So the person, the agent who's looking at tax year 22 folder does not need to be reading about tax year 23 and 4. The one who's in 24 needs to be reading about 24. So I provide it in separate annual reports, the qualified research activities and the qualified research expenses are then associated directly with that. So we do a lot of the heavy work for you. And that's our goal, is to make sure that you ultimately get what you qualify for, bring awareness to you, help you through the process, and we're in it with you until the end when you get your checks. So let me move forward and just kind of show you, I'm going to show you a couple of case studies here.
There's one thing I want to add in real quick that I forgot to mention that's actually pretty important. So when you do get your refund checks for each year, like I said, there's interest added. The best thing about it, though, is it's actually tax-free money. So you're going to get that check, you put it into your personal account, and you do not have to pay taxes on it. It's already been taken care of through the process. So tax-free, you can do whatever you want with it. You can go on vacation, buy a new car, build a pool, but we'll put it back in your business. So that's another important thing.
Yes, that's true. And again, it's so unlike the PPP, the draws, or the ERC. That was revenues that were retroactively added revenues to your practice or to your business, and then you had to pay taxes on that money accordingly. The research and development tax credit, once those checks or those credits are processed in the check form and it comes to you, that's tax-free money, as Casey just said. So I can get into long, quick mathematical problem or example, and I will let me just run through it for those who catch it. That's fine, and for those who don't, maybe it's recorded and you can look at it again. If you're running a 10% profit margin hypothetically, and we get you $100,000 for that net tax-free $100,000 that you are putting in your pocket, you would have had to have run 10 times that, so $1 million. But if you're being taxed at 30%, probably more, but at 30%, then that means that you would have to multiply that times 3.3 again. So you would have had to generate $3.3 million to have that $100,000 net in your pocket. And the issue with that is we are talking about the past. There's no other way for you to go back and regenerate $3.3 million in the past. But yet we're able to help you put that $100,000 tax-free in your pocket today. If you follow that math, you'll understand this is a beautiful program, and we're very helpful. We're very happy to help you. So a couple case studies. I know we want to stay on schedule, so let me just hit a couple. These are real case studies. The names of the clients have been removed to protect the innocent. This particular one here, over the 3-year period, had gross revenues of $13 million. Approximately, just a little over $3 million. The total wages for those 3 years was $1.8 million. As Casey was explaining, we look at each one of your employees. This is one of those changes with the new our extra effort of making sure that what we are claiming on your behalf or helping you claim is within the confines of reality. In the past, tax years, again, filing tax years 19, 20, 21, and we would just say 30% across the board, 30%. Well, now we break it down. So we're looking at what does the dentist do? What do the dental assistants do? What do the hygienists do? What does the front desk do? And so forth, based off of the qualified research activities. And then we put those percentages, what percentage of their day or week or month is actually attached to that activity. How much time is your lab tech milling, scanning, designing, whatever they need to be doing? So qualified wages is the drilled down amount of how much labor was associated with the qualified research activity. So in this particular case, 13 million gross revenues, total wages 1,800,019 or 1,819,000, and qualified wages was 755,769. The total expenses on the P&Ls was $8,960,000. Of that, the qualified research expenses outside of wages was $1,566,000. By the time it all filters down from those gross amounts into the buckets and then put through the algorithm calculator, how much was the actual check received by the client? $138,678. And I picked this one in particular because there's a lot of factors that come into this. And so even though we're looking at 13,303,000 gross revenue, in our perception, the $138,678 was actually a rather low return. However, there were other things that came into play. For instance, they received their money from the ERC and didn't claim it in 21. They claimed it in 22. And so they got a lot of ERC money, and that tax reduced their ability to catch this. So remember, there's no double dipping, and with the ERC was all based on wages. R&D, a majority of it is based on wages. So the CPA cannot claim the same or double dip on the wages. And this is a good example. So now let's go to case study number 2. In this particular case, we have lower revenues, and yet we have $292,000 of recovery. So it's, again, there's other factors other than just, oh, it's really easy. Here's your wages, here's your expenses, and here's what you get. And so our CPAs are extremely fine-tuned in knowing what the rules are and how to get where we need to be using the laws and the calculations accordingly. So I really want to see if maybe anybody has any other questions or concerns on this, because otherwise, you know, we're good with the presentation. Would you like me to back up to any slides in particular?
Yeah, so let's open up the floor for questions.
Okay.
Primarily, you know, if we can, if whoever wants to ask the question, you can unmute yourself and go ahead and ask the question.
There's one thing I want to add in.
Sure.
So when we're doing this the first time, we're going back and amending your 1120s and your 1040s. This is the only time we're going to have to do that. And like I said, or David had mentioned, the deadline is July 6, 2026. After that, moving forward, we're going to be able to do this every single year. This isn't a one-time thing like the ERC. So moving forward, we're actually going to do the calculations prior to you filing your tax returns. So we're going to work with your CPA. We're going to get the, you know, all the calculations. We're going to provide, it's called Form 6765 to your CPA, and they're going to insert that into your normal filing. So you're actually not going to have to wait for checks, the IRS to process the returns and the checks to be mailed. That process can take sometimes 6 months to get those checks. Sometimes sooner. It could be anywhere from 16 to 20 weeks. I've also seen it last longer on the older years. So moving forward, when we do what we call a timely return, we're going to actually be able to get that credit instantly on that current tax year. So it's going to reduce your tax liability instantly.
Mm-hmm.
There is a question that was posted recently, David. Question is, if we use true benefits, can we pay them once we collect our check, or how do we pay? Also, I am not able to unmute because it only gave me, okay. Yeah, Doc, you are added as a viewer, you know, so please go ahead and post your questions in the Q&A section. So that's how we'll be able to answer.
By the way, Arafat, I can unmute them?
No, I mean, viewers cannot be unmuted.
That's okay. I appreciate you. I appreciate you sharing this. And this is a standard question. You know, we charge 25% of the actual recoverable amount, the tax credit that we promise to you. So again, we only we charge half of that upfront to provide all the work that we do, the reports, the submittal, the tracking, and so forth. And then we stay with you, and we are in the boat with you until you get your final checks. And we collect the balance of the fee on the back end. As Casey was talking about, you're going to receive interest on top of the tax credit that we promise you. We do not charge a fee on the tax or the interest that's added. Furthermore, if your if your refund is reduced by the IRS, they say our calculations are excessive, they reduce the tax credit recovery. We will adjust the invoicing on the backside and reduce accordingly. And if there's ever a situation that the credit is rejected, then we will refund you the money. Casey, you look like maybe you have some other information that you want to add on that.
Well, like you said, so the fee is 25%. We ask for half of that up front. We know everybody has a different situation. So if that's something that's you're not able to do, we are always willing to work with you. We are flexible. Say your recovery is $500,000. That upfront fee is going to be pretty significant. So there are times where, yeah, we can take 25% up front. We're willing to work with you. It's nothing set in stone. So based on your individual situation, we're willing to, like I said, be flexible and work with you. We don't want the fee to be a reason why you don't move forward.
Right.
Is there any special discount for people who come through DentTracks or USA Dental Solutions?
David.
David, putting you on a spot, man.
Actually, probably one of the best things that we could do is make sure that everybody that comes through DentTracks, instead of asking for 50% on the front end, that we ask for 25 on the front end. Because that makes it much easier for you to move forward, and then we're in the boat together.
Yeah, that's fantastic. That's a great concession you're doing.
Yeah,
appreciate that. Yeah,
absolutely. I think that's the best way to go about it, because everybody
that instills like confidence in everybody that you're so confident that you will be able to get this money back in their pocket, that they will be able to work with you. I think that's a great concession. Thank you for doing that.
In the second half of the fee, it's only due when you receive each check. So like I said, each check is going to come at a different time. They're rarely processed at the same time. So you only have to pay that second half when you get each check. Another thing I want to point out is when we start doing the timely returns starting in 2026, 100% of the fee is going to be due up front. And the reason why is we're not waiting for a check. We're actually doing the calculations, and then we're done after that. So you're going to be getting that tax reduction immediately. So the fee is due up front. In those cases, sometimes we will reduce the fee because there is less work done. We're not amending your tax returns. So we'll start with this 3-year look back, and then moving forward, we're going to be maybe changing the fee, reducing it due to the not having to amend.
Right. Yeah, there's a lot of effort that goes into the amending. They have to familiarize themselves with every client's past years and try to figure out, and then especially coming out of the other years with the ERC, and did they get ERC money? Did they not? Did they get PPP? Did they not? Was it a carryover? There's all kinds of other calculations. And so at this point, that's one reason why I'm more reluctant. But I do want to be conciliatory to people and work with you and instill that trust, as you said. One thing that I can say is that in the years that we've been doing this, and the hundreds of clients that we've had in the dental space particularly, I can only think of 2 cases that I'm aware of. Casey may know of somebody else, but I am only aware of 2 cases where there was an actual audit. And in both cases, the reason was because the client did not assist us in responding to the letter that was sent from the IRS. The IRS does not just arbitrarily audit people. They don't. They send out a letter that says, I have a concern, or I have a question, or can you please substantiate? Can you add additional information? And they give a timeline they tell you we have 30 days or you have 45 days to respond. It's metaphorical. I apologize, but it's so accurate. It's no different than if you're running late, you leave your house in a hurry, you don't put on your seatbelt, you race through the streets and you run the stop sign and you get pulled over. The police officer writes you 3 tickets. You are not guilty. You are signing that you will show up in court. You are not in trouble until if you don't show up in court, then you're in trouble. It's very same with the IRS. You are not in trouble. There is no issue if you are responding to their letters in a timely manner. And we are here to help you address any letters that you get. If you ever are working with us and you get a letter from the IRS, we request that you please share that with us immediately so that we can solve this together, whatever it is, because we do not, as far as I know, we do not have a client that got in trouble by responding. Is that true, Casey, or do you know of any?
Yeah, that's exactly true. And it looks like we have quite a few more questions. So to stay on timing.
Okay.
Yeah, so there's a follow-up question to the previous one, just to clarify the fees. Question is, so if I understand correctly, the half of the 25% is based on an estimate. Is it usually pretty accurate? The person asking the question did understand that there can be discrepancies and will adjust it accordingly.
We give out the estimate, but once we actually finalize the amendments, the numbers sometimes change. And so we go off the final numbers, the actual, we don't bill off the gross credit, because the gross credit on your 1120s where you're going to see the credit is going to be higher than the actual recovery. So we're only billing off your actual cash recovery. And then I'm seeing that someone's asking about, you haven't filed your 24 personal returns. Those are due on October 15th if you filed an extension. We could try to do our best to do that for you by the 15th, but it'll be a little bit hard. We have a lot of files in the pipeline, so we would probably recommend go ahead and file those returns, and we'll have to amend. I mean, if you could get the documents over to us in the next 24 hours, we can make it a priority to get it out in time, but we'd have to get moving very quickly.
Yeah, I think at this time, with the workload that we have, I would recommend that people are just safe. You know, there's no reason to avoid or there's no reason to incur any kind of fees or penalties by missing a date with the IRS. If you just go ahead and file it, we do amend and will amend, and we don't have a problem amending even if it's right after. I agree with that.
And then David, there's some more questions. If we're unable to recover any of the taxes, what would your fees be? If there is a no recovery, there are no fees. Our estimates are 100% no cost. If there is no recovery, there is nothing to be paid for.
Yeah, and we will reimburse. We will fully reimburse. Somebody paid up front and it's completely rejected. There is no recovery. We're going to work with you. We're going to reimburse that fee.
And then also I see asking about 1099 salaries. That is okay. So you can get up to 100% of W-2 employee wages back. Obviously, we know that your employees are not doing 100% of research and development all day long when they're working. So we do conservative percentages for your wages. We never go up to 100% because we know that dentists and hygienists and dental assistants, they're not doing research and development 24 hours a day. So typically the max we do is around 40 to maybe 50%. For front desk, maybe 5%. But for 1099 salaries, that's considered a contractor. You can get up to 65% of that money back. But obviously we know you're not doing R&D activities at all times. So of that 65%, we typically, it varies. We might say 30%, maybe 40, it just depends. Well, we're going to ask you those detailed questions, and then we're going to put those percentages based on your personal situation. And then David, do you want to answer the other ones, David? Do you see them?
There is one more question. If we have got deduction on a new equipment, will this R&D tax credit on that equipment will be double dipping?
That's a good one. Actually, Casey, it's probably you, but the separation between on the expenses that does the R&D does not apply to depreciable equipment.
That would be double dipping. So no, that we definitely take that in consideration. You're talking about the 179 deductions.
Right.
Yeah. So yeah, we do not calculate those in.
So the assets that have already been depreciated are excluded from the R&D calculations.
Yes, it's important to know that the it's not the equipment, it's not the milling machine. I bought a glide well. Okay, that's great. You're depreciating that cost through your P&L over the next 5 year or whatever the wear time is. The research and development is not the cost of the machine. The research and the development is in the labor time spent by your employees using it, testing it, improving your deliverables with it. And that's where it comes in. That's what the R&D is, the wages using that new technology because of the improvement of efficiencies and speed, delivery, and the reduction of client-patient.
Right. So you've already received a credit from the government for the equipment that you've put in, but you never received the credit from the government for the people who are using it and struggling with it and trying to find the proper way to streamline the process and learn it, fail from it, have made a crown and 5 crowns were made badly and then now the 6th one is correct. So all of the material that you used in it, all of that, we never get credit for it. So this is an opportunity to get a credit for all of that. You already got a credit for the equipment. So great question. Another question that came is related to IRS. Like, what happens if, say, we've done this, we had a relationship with you, we got the credit, and then later on IRS comes back and asks the money back, then what happens?
I don't think that's ever happened, but Casey, you want to?
No, I have not seen that happen. I've been specializing in research and development for, I think, about a little over 4 years. I've never seen that happen one time. I mean, if they're going to deny it, they deny it up front, and I rarely see denials either. The only way they deny it is if you submitted the claim after the 3-year statute of limitations to amend. And so, but we know what those dates are. We know that up front. So we know if you do have a deadline. So,
but if something like that has to happen, you'll work with the client and you'll figure out a way to.
Yeah, we're always gonna, if you get an IRS letter saying they want more information, which occasionally they do that. I don't see them doing that for these 3 years because they started asking for additional information, like the reports that we're providing. So now that we're doing that, you're not likely to get those letters from the IRS asking to substantiate it. So
right. And that's the whole point, is that the IRS doesn't just come back and ask for the money back. They don't just come back and audit. They don't just do these things. They always start with a letter. That letter, as long as the client, whether it's current, past, 3 years later, 4 years later, we have compiled the substantiating documentation, both in the qualified research activities and the financial records through your P&Ls and your payrolls to be able to respond appropriately. So if anything got lost in translation, we still have that record to be able to provide them. And a lot of that, there's a lot of fear in people are guided by fear or the fear of others who have told them. I had a conversation with a beautiful doctor up in Massachusetts just 2 days ago, and he kept explaining that how upset he was after knowing that his relatives who are dentists in the area. We have helped them with the ERC and the R&D, and he sees how much money they got, and the whole time he was upset with himself for listening to his CPA, who kept saying, well, I don't think I would do that. Well, I'd be concerned about that. Well, you might want to think about that. I won't know if you, and he's missed out on $300,000. And now he's come to the realization he doesn't want to listen to a CPA anymore. He's getting the money, and it's like, I don't want to put CPAs in a bad light, because it's their job they do their job very well. They work very hard and diligently to make sure that you pay enough money to stay out of trouble with the IRS. And they do that extremely well. We love to work with you and your CPA to make sure that we get the documentation, we educate your CPA as to what we're doing, why we are doing it, how we are doing it. And ultimately, Casey and I have found that CPAs are a great source of partnership for us once they understand what R&D is, how it works. Then they start bringing their clients to us. But I don't know if that was a long answer to nowhere, but I hope it helped.
Yeah, so I posted an email for everybody to post their questions in that email. If there is any question that has not been answered, I want to respect Casey and David's time, and we will get back with you on the answers to those questions.
Yeah.
I mean, if you guys have time to answer a couple of questions, go ahead. But
I did see a question about audit. Yes. When we provide you with your credit estimate in our contract, it clearly states we do protect you in case of an audit. If you were ever to have to pay back the money, we would 100% pay you back all your fees. So that's clearly stated in our contracts.
Right. And after, the other thing is that we have full transparency. So once the amendments are done and the files have been claimed and submitted and so forth, we provide the business owner and their CPAs with a copy of the work that we did. So it's just we're fully transparent.
Great.
Thank you, Casey and David, for getting on a call on a Saturday, and we appreciate your time. We will do more of these sessions with them because we want to understand the other tax strategies and other ways to get the money back from the IRS, and there are a few more of them. So we'll set up a time for that. But appreciate your time and appreciate everybody who joined the call.
Yeah, and I'll go ahead and put both of our emails in the.
Sure.
I'll send up a follow-up email to the entire list of attendees.
Please provide them all.
Contact information with for David and Casey, both of you.
Perfect.
Absolutely, and I so part of the process, once everyone gets their email and they communicate with us, again, Casey's going to be very instructive, and we have our team in gathering those documents. I welcome everybody to give me a call. And so if you would, make sure that they have my phone number to give me a call so that I can do a personal interview and learn about, maybe review some of this, but also learn about the evolution of their practice and what the improvements have been from one type of equipment to the next, and all the things that Dr. Yarkhan, you understand that we've discussed. So anyway, with that, I also thank everybody for joining us today. I thank you all for hosting this, and I look forward to being able to have many more of these in the future.
Yes, thank you all for attending.
Thank you.
Thank you, Dr. Yarkhan, Arfat.
Bye-bye.
All right, we'll talk to you all soon.
Bye-bye.
Have a good day. Bye-bye.
Bye.